Hey guys, Victor here with Individual Investor. In this video, I want to show you another ratio or tool that you can use to complement what we have already discussed about return on equity and return on invested capital. This ratio is called the return on assets or ROA. And because the ROA is useful only when comparing companies with similar asset bases, we will take a look at AMD and Intel to illustrate this concept. Return on assets reflect how much income a company generates by putting its assets to work. It is a performance ratio that indicates how effective the management of a company is at managing the company's assets. The formula consists of taking the net income and dividing it by the total average assets. The reason we take the average total assets is that technically, if you're looking at the income for a given year, that income was in large part influenced by the total assets the year before. So as a rule of thumb, when you calculate ROA for a given year, you take the net income of the year you're interested in and divide it by the average of the assets in that same year and the year before. ROA is super straightforward. Let's take a look at the 10K report for AMD and Intel and calculate ROA ourselves. Alright, let's get started with AMD first. So here we have the 10K form for the year 2020, and we need to go to the financial statements here, and we need to find the net income for the year 2020. Here we have it, $2.49 billion, so everything here is in millions. Okay, so let's put here 2.490. Perfect. So we have the net income, and now we need the total assets for the year 2020 and the year before and 2019. If we scroll down, here we have the balance sheet, and if we go to the total assets here for 2020, we have $8.962 billion. 8.962. And for the year 2019, we have here the second column. We have $6.028 billion. So 6.028. Perfect. And now remember that return on assets is simply the net income divided by the average of the total assets for the same year that you're calculating the ROA for and the year before. Okay, perfect. So we have 33.22%. Okay, and here now I have Intel. Let's go to the 10K form, and same process here. Let's go to the financial statements. Where are they? Yeah, here. Consolidated financial statements, page 74. Okay. And here we have, yeah, we need the net income over here. Net income. And then we see that for the year 2020, it was $20.899 billion. And then the same process as before with the assets. Let's go to the balance sheet, and we need to find the total assets here for the year 2020. 153.091. And then for 2019, it was 136.524. 136.524. Okay, perfect. And then the same, so we're going to take the net income divided by the average of the total assets for the current year and the year before. And we have 14.43. Okay, so that's probably one of the easiest financial ratios to calculate. So how can we interpret now the result? The difference here is pretty huge, right? We have AMD with a return on assets of over 33%, and Intel has a return on assets of roughly 14%. So the difference is pretty big. AMD's return on assets is twice as much as Intel. So it seems like AMD is probably the better investment, right? Not so fast. Even though both companies operate in the semiconductor industry, which is cyclical in nature, Intel is bigger than AMD. At the time of this video, Intel's market cap is about $206 billion, while AMD is about $167 billion. Also, Intel has a wider range of products that go beyond just processors and graphics, such as memory, storage, FPGAs, etc. Intel generate a lot more in sales and revenue. If we look at past performance figures for ROA specifically, we see that despite AMD's latest incredible performance, it has struggled to maintain a consistent return on assets, as opposed to Intel that has been fairly consistent. If you listen to people like Warren Buffett and Charlie Munger, they always seek consistency in performance. Regardless of the stock price, over the long term, if you invest in companies with a solid return on equity, return on assets, and return on invested capital, you can be almost 100% sure that your stock price will appreciate or generate returns as good as those returns from the return on equity, assets, and invested capital. So to wrap up this quick comparison between AMD and Intel, let's take a look at some of the price multiples from a valuation standpoint. If we look at the price to sales, price to earnings, and price to book ratio of AMD over the last few years, we can see that they are very, very high. If we look at the Intel price multiples, they actually look fairly okay, at least from a high level. So based on this super quick, incomplete analysis, if I had to pick between the two stocks, there's no doubt I would go with Intel, because we can see that there is consistency in its performance from a return on assets perspective, and also from a return on equity and return on invested capital perspective. Also, if we look at the valuation multiples, such as the price to sales, price to earnings, and price to book ratio, Intel is also trading at a much more attractive valuation than AMD. Alright guys, that's it for today. Thank you so much for watching. If you enjoyed this video, please don't forget to hit that like button and subscribe to my channel. Thanks again for joining, and I'll see you next time.